Yo, what is up, guys? What is up? Happy Monday. Today we're going to continue with the Monday basics. And today we are going to go ahead and break down macro to micro entries. Okay? Macro to micro entries. What is that exactly? So, macro, right? Higher time frame. Let's just go ahead and break this down. Macro equals higher time frame, right? Micro equals lower time frame. So how can this benefit us, right? Understanding macro and micro, how can this benefit us, right? Let's go ahead. Macro, we'll just keep this here, I guess. Macro is 100% best to understand trend and bias, right? So I like to use my macro timeframes to understand the trend because if you are on the 5 minute, the 15 minute, maybe even the 1 hour time frame, you are not going to understand the trend the best you can, right? Because you could be right here on the 1 hour time frame, right? And it looks like the market is going down, right? You're like, yo, the market's bearish right now. But if you jump on a higher time frame, you're gonna see, we're actually bullish. We've been creating higher highs, higher lows, higher highs, and right now we are waiting for the market to come back and give us an entry at this starting point. So yes, the market may be in a downtrend in this area, but this is the micro, right? As soon as we get to this macro, the higher time frame uh opportunities, we want to go ahead and continue with the trend, the macro trend. Give me a 2 if that makes sense. And let's change this to blue real quick, right? So the black line in this example would be my higher time frame trend, right? We want to continue with the buys. And the blue line would be maybe the 15 minute, the 1 hour time frame, possibly even the 5, right? It's counter trend selling at this moment in this area. But on higher time frame, we are continuing to buy. So this is super important why we understand macro time frames. Right? Now, when it comes to the micro, this is where we find our entries. Right? This is where we find our entries. Now, I'm not saying, macro setups aren't good. You can't use those, right? If you are someone who is fairly new, guys, use the micros. I mean, I'm sorry, use the macro, use the higher time frame setups. It's going to be much easier, right? If this is what we're looking at right here, let's just say I'm going to change this color to black right now. So again, black is higher time frame, black is higher time frame, right? If we know that we want to take some sales in this area, if we know that we want to take some sales in this area, this is the thing, right? Oops, let me actually just move this back down this way. This is the thing. My stop loss is up here, which is completely fine, right? This is still an opportunity, right? This is the higher time frame opportunity. This is still good. I want you guys to understand higher time frame, guys, higher time frame setups are still good. If it's much easier for you to catch the higher time frame setups, guys, make trading easy, right? If you know that you're dropping down and you're just continuing to get clapped, guys, you're not there yet, and that's okay, right? Stick to the higher time frame. If you can see the break of structure and you can see the change of direction, but maybe the setup is on the daily or the 4 hour time frame, hey, that's okay. Find your starting point or your left shoulder, understand where your stop loss is supposed to go, and run your opportunity. Give me a 3 if that makes sense, guys. Because we're all going to be at different stages in our trading, right? Maybe, um, Etney is super, super advanced. So she's going to go down to the, seconds with her sister. But let's just say, myself, I'm new. I'm super new. And I just want to understand the setup. This is for you. If you just want to understand and start taking opportunities slowly, guys, this is for you. Trust the higher time frame. It's still good. Your stop loss is going to be a bit bigger, but it's okay. Run your 1 to 3 risk to reward and let the market do its thing. Okay? Guys, give me a 1 if this makes sense. Unmute. Let me know this makes sense, guys. Let's go, Edney. Let's go. Now, let's go, Joseph. Now, the micro. Let's go, Carlos. Is this blue? All right. The micro. This is where our setups get to be a bit more detailed, right? Our setups get to be a bit more detailed. Now, again, this blue line could be the 15-minute. This can be the 5-minute. This can be the 1 hour time frame. Okay. Now, this is the thing. Nothing changes, guys. Absolutely nothing changes. Everybody unmute or type in the chat, nothing changes. Type or
Nothing
unmute saying
changes.
nothing changes, guys. Let me know. Nothing changes. It doesn't matter what time frame we're looking at. Nothing changes. I don't want you guys to get confused like, yo, he did this on the 10-minute. He did this on the 1 hour, but when we get down to the 1 minute, what do? No. It's the same thing. How we analyze the monthly, we analyze the weekly the same way. The way we analyze the weekly, we analyze the daily the same way. The way we analyze the daily, we analyze the 4 hour, the 1 hour, the 15-minute, the 5-minute, the 1 minute. We analyze every time frame the same way. Nothing changes. Okay, I don't know what this is. Um, so if we have breaks of structures, well, let's go ahead and identify. Right, break a structure. This is my change of direction line. As we continue to get breaks of structures, guys, let's continue to adjust our lines. Nothing changes. We have a break of structure here. Let's continue to adjust our lines. Give me an 8 if this is making sense, guys. We've talked about this for months, since we've been doing these calls for the last 2 years. I've been teaching the same thing. Absolutely nothing changes. Okay. This can be a 4 hour setup. Let's go ahead and we'll just label this right here. Let's call it a daily setup. Let's just do it like this. And the blue line will be the 5-minute. And we will color this blue. Right? So we should be good, right? We know that we're looking at the daily setup, and now we are trying to lock in on that 5-minute setup. Okay. We have another break of structure to the upside. We have our change of direction line. As soon as we change direction, guys, let's go ahead and label that. Let's go ahead and label that. Change of direction. So now this is the thing, and now this is where things get a bit sweeter, right? This is how we get more advanced, and this is how our risk to reward gets better. Okay. Depending on how you look at the market, right? We have a we have a breakout rally, which should give us a starting point, right? We're looking at the same thing, another starting point in here. Or if you look at it with the head and shoulder market structure point of view, we have my left shoulder, right here. Guys, give me a one if this is making sense. And I'm gonna break it down again. I know I'm going over this kind of quick. I'm gonna break it down more in depth. I'm just telling you why the macro is so important and why the micro is so important. Now, if this is my setup, my new stop loss is going to be right here at the brand new market structure that was just created. So instead of using this stop loss, I'm going to be using this stop loss. Now, this is the thing. We always want to practice 1 to 3 risk to rewards. Especially if you're new, you always want to practice 1 to 3 risk to rewards. Always. But now this is where things start to get a bit sweeter, guys. If you're intermediate or advanced, I want to go ahead and tackle the lows. I want to tackle these lows here. Why? Why would I want to tackle these lows? Who wants to guess? Why would I want to tackle these lows here, guys? Take out liquidity. That's exactly where liquidity started, right? In this area. Liquidity had started in this area, but not only that, if we're downtrending, lower low, lower high, lower low, lower high, lower low. If the market is creating a lower high, wouldn't we want to make our way down to make a brand new lower low? Wouldn't you want to continue with the trend? If the market is selling, wouldn't you want to continue breaking structure to the downside? Does this make sense, guys? Let me know. If you're confused at any point, give me a question mark. So, yeah, this is my lower low. This is my lower high. I want to go ahead and continue making a brand new lower low. So I would love to see if I can hold my trades down to this to this low. And now this gives me a much better risk to reward. Much better risk to reward, right? So when the market comes back, we can go ahead, take some opportunities, and see if we can go ahead and hold to make new lows. Any question marks? Let me know, guys. Any question marks? I'm going to go ahead and break this down one more time, right? I'm going to break it down one more time. Let's get this out the way. Get this out the way. I'm going to keep this. Let's see. All right. So again, we are downtrending. Oh, I should have kept it. Anyways, we're downtrending, right? So in this example, we are going to be downtrending. Now, guys, if we're downtrending, what should we be looking for? Buys or sells? Sells. Let's go. If the market is in a downtrend, we should be looking for sell opportunities. Why fight the trend? Okay. So let's go ahead and we're going to build structure. Okay. Now I'm going to go ahead and draw up a head and shoulder. Going to build a little bit of consolidation. Okay. It's all good. I'm going to take a little bit of time, but honestly, it's going to be really good examples. So it is what it is. Gonna make some consolidation real quick. Let's go. All right. Let's pull this up. All right, cool, guys. Right now we have consolidation. Okay. Now we're looking for sells. Why are we looking for sells? Because the market is in a downtrend. Okay. The market is in a downtrend, right? So if I have to draw this here so it makes a bit more clear, makes a bit more sense, we have a bearish break of structure, right? We're looking to take some sell opportunities here, whatever the case may be, right? Let's just so it's in your head, okay? We are looking to take some sells. But this isn't the area I want to focus on, so I'm going to go ahead and delete that. But I want you guys to understand why we are looking at sales, right? Because we are breaking structure to the downside. Let's go ahead and delete this. Okay, cool. So let's go ahead. We need the market to sweep liquidity because as of right now, guys, we have liquidity building up, a whole lot of liquidity, right? So let's go ahead. We need a head and shoulder. So as of right now, we would like to see the market sweep to the upside, clear this liquidity, and then continue to the downside, giving me a head and shoulder. Okay, so let's go ahead and make that happen. Give me that. Awesome. The market just swept liquidity. Let's go ahead. So if you had your liquidity line right there, awesome. Let's go. If you see a liquidity sweep and you see a chart that looks like this, guys, understand this is your left shoulder. If you see a break of structure to the upside, understand the liquidity sweep and the break of structure are the same thing. Give me a 4 if that makes sense. Liquidity sweep and the break of structure are the same thing. Okay? Need you to understand that. Because I may mark it up like with the BOS, but Neri, maybe Miguel, maybe Gio, right? Maybe Jordan Morgan, Zachary Hogan, Siva, they might have the liquidity sweep, but it's the same thing. Break a structure, liquidity sweep, okay? Now, we need to see that change of direction. So let's go ahead and make this structure happen. Market's giving me what I need to see. Let's go. All right, let's go. The market's selling off the way we want to see it. The market respected this sell area. Let's go. I love it. Right now, again, guys, the black line. Where's my text? Daily setup. Let's make this huge. Wow, I can't even spell. Right? This is the daily setup. I'm going to leave this here. Okay? We have our break of structure. Where would my change of direction line be, guys? If you guys can annotate on my chart, where would my change of direction line be? Now I'm going to go ahead. Actually, no, I'm going to leave it. Who wants to go ahead and draw my chart, guys? Who can see it? Where would my change of direction line be? For sales. I'm looking for sales. So if this is my break of structure. Oh, Catherine. What? Catherine was the only one that got it right for the counter trend, actually. Wow, let's go, Catherine. Let's go. You're right. When it comes to this, you're right. But I'm talking about the sells. If this is my break of structure to the upside, all right, Joseph, now you're just drawing, bro. This is my change of direction. Let's go, Fernando. Let's go. This is my change of direction. Joseph, if you could delete that, that'd be perfect, my boy. My change of direction line would be here. All right, good. I'll go ahead and exit out real quick. Bet. All right, cool. So that's the thing, guys, right? That's the thing. If we have a bearish break of structure, we're going to have a bullish change of direction. A bullish change of direction. So this is how you know. No, you're good. This is how you know we continue to look for sells until this line gets broken and closed above. Once we break and close above this, then we're looking for buys. But notice, if we break and close above, giving us a BOS at the upside, well, where's my change of direction? My change of direction line would be here, right? So let's go ahead, delete this just for the clarity. We have the breakout rally. Where's my starting point, guys? Where's my arrow at, bro? Is it? All right, y'all too quick. Y'all don't even let me ask, but that's good. That is my starting point. Let's go. Why is this my starting point? Because this is the last buying candle before the breakout rally, right? We need to identify the breakout rally. I don't care. I don't care about this right here. I don't care about this. I don't care about this rally. I care about the rally that breaks structure. Find the rally that breaks structure and then follow that rally back up. Follow that rally back up to the last buying candle right here. That's my starting point. Let's go. Now, my shoulder. Where's my shoulder, guys? This is why we mark up our breaks of structures and we mark up our liquidity or our liquidity sweep, right? Because if you can see liquidity, once that liquidity gets swept and it's followed by a change of direction, right? Once this liquidity gets swept and it's followed by a change of direction, we now have a head and shoulder setup. So it's super important you're able to understand liquidity and you're able to understand liquidity sweeps and you're able to understand breaks of structures followed by a change of direction, right? So it's super important you guys understand that. Oops. There are trend continuation breaks of structures, right? This continued trend break. This one continued trend as well, right? Those are trend continuation breaks of structures. And this is the counter trend break of structure, right? This is going to help us find our head and shoulder. Someone's going to understand that, all right? And if you don't understand that, it's not your time yet. But it's super important that we understand liquidity because if we can get liquidity, guys, or consolidation, followed by a sweep or break of structure, followed by a change of direction, bro, that's the setup. That's the blueprint, right? My shoulder would be there. My stop loss at the high. So this is the thing, guys, right? Give me a 2 if you guys are with me right now. Give me a 2 if you guys are with me, and give me a question mark if you are confused right now. Let's go. Let's go. Awesome. So look, higher time frame, the black setup, the black line, daily setup, higher time frame. Okay. Daily setup. Let's put and now we're gonna have lower time frame. And let's say this is the 5-minute setup. Okay. Well, let's go ahead. My stop loss would be here. So now we understand the trend right now. Why? Because we understand the higher time frame. So as the market is making its way back up to me, I need to understand breaks of structures, right? I need to understand the break of structure. We have the break of structure here. Only thing I'm confused about is why the change of direction for buys would be the higher lower high instead of the stop loss? Is it the higher one for possible reentries? Go ahead and draw my chart. Only thing I'm confused about is why is the change of direction for buys would be the higher lower high? Yeah, that's exactly right. This is my change of direction for buys. For buys. Well, that it would adjust here, right? It would adjust here. You got to continue moving your lines. You got to continue adjusting your lines. This zone had already played out. I don't know if you were late. Is it possible for re-entries after getting stopped? Yes, it is. Yes, it is possible, right? And now this is the thing, right? If we were looking for sells here, if we were looking for sells here and the market stopped us out, right? The market stopped us out, but ended up continuing to the downside. Well, obviously this setup is no longer valid, right? Market hit our stop loss, continue to the downside, but now we have a brand new setup based off of structure. This would be my stop loss, but it also goes hand in hand to we need a change of direction for that. Let's go. Awesome, JC. So this here, this setup would be your reentry. Okay. But good. I'm glad we're on the same page. Awesome. So now, this is my change of direction for sales. If the market breaks and closes below, we can start looking for sales. But if the market does not do that, it can still go higher. So let's just continue with the breaks of structures. Let's continue adjusting our lines. Let's continue adjusting our lines. Consolidation, awesome. Break a structure. Let's continue to adjust. Because this is how it's going to be, guys, on the chart. Market structure is going to look stupid ugly, right? Stupid ugly. Break a structure to the upside. You guys have to be able to understand. Break a structure. Let's continue. Now, this is the very last one. Let's see if the market is going to change direction. If the market changes direction, we can now look for some sell opportunities with confidence, right? If it doesn't, it can continue going higher. Now, this is the thing. Again, guys, you can totally 100% enter off of the daily setup. Let's repeat that. You can 100% enter on the daily setup, but I'm trying to minimize how many pips I'm risking to something like this, right? So let's go ahead. Let's continue breaking this down so I can explain that. Is the market going to change direction? Let's see. Let's see. Consolidation. We have one more breakout. Let's label that. Very last VOS. My change of direction line needs to go there. We have the change of direction. Let's go ahead, mark that up. Guys, this is where things start to get really, really nice for us. If you can follow the rules and wait patiently for our change of directions, this is where things get really, really nice for us. Why? Now, this is where I'm going to go ahead and break this down again. Yes, you can 100% enter off of the daily setup. 100% you can. Okay. But I want to minimize how many pips I'm risking. So as soon, let's go get rid of this for the visual. But as soon as we get this change of direction here, guys, I want to look for a brand new setup. So let's just say there's a starting point right there. Awesome. I'm going to use this brand new 5-minute setup, the lower time frame, 5-minute setup. Guys, why are we using the lower time frame right now? Why are we going to use the lower time frame right now? Now it can be the 5 minute, it can be the 15 minute. The lower time frame goes down to as low as you feel comfortable. But why do you think we're dropping down to the lower time frame? For the better entries. For the better entries, guys. Right? Simple as that. I'm not gonna make shit hard for you guys. I'm not asking y'all any, trick question. Yeah, and the better R to R. Let's go, JV. Right? So this is my setup right here. Again, whether it's the starting point or your left shoulder, we're looking at the same thing based off of breaker structure or liquidity, followed by a change of direction. This right here is the real gem. You need to understand change of direction. Once we understand that, guys, things are going to really start cooking for us. But now my setup goes from something that looks like this to now something that looks like this with a way better risk to reward. Especially if you use the shoulder, we get a way better risk to reward. Now, this is the thing. We always want to practice 1 to 3s. We always want to practice 1 to 3s. But look, guys, if this is my lower low, this is my lower high, this is my lower low, this is my lower high, this is my lower low. If this is my lower high, where would I want to hold my trade tail? I want to swing this trade. Where can I hold this trade to? Let's go. Catherine's saying, I want to go ahead and swing this to the low. Let's go. I want to go ahead and swing this to the low. Guys, this is a question for everybody. Yes, I want to swing to the lower low. Why, Joseph? Why would I want to hold this trade here and see if I can swing this to the lower low? Right? Let's go ahead and follow market structure again one more time, bro. Right? Let's go ahead and follow market structure one more time. If this is my lower low, lower high, lower low, lower high, lower low. If this is my lower high, wouldn't you want to catch this trade and send it down to make new lows? Wouldn't you want to send it down to make new lows, Joseph? Yes, sir. That's exactly why. And yes, Catherine, you're right. This line, we want a TP here, but if we can get that market structure to break and close below, that would give us a bearish break of structure. Guys, this is how we follow trend to the downside. Is this making sense, guys? Let me know if this makes sense. Again, I'm gonna go ahead and just leave this here for a couple seconds. We have the daily setup right here. We have the 5 minute setup right here. Y'all can take a screenshot of this if you guys need examples. Do what you guys do. Solid examples, guys. I'm telling you guys, I only give you guys the good examples because I want it to make sense when I break it down. I would rather explain for 45 to 50 minutes and give you guys 10 minutes of examples because the examples that I do show you is going to look exactly like this. And these are the examples that we want to see, right? So let's go ahead and continue. Let's go ahead and continue. Let's just look at a random pair. I don't even know what we're looking at today. Let's just take a look. I don't even know. Now, let's see. Let's go to some different time frames. Let's get this out the way. I want to look at some random stuff that we don't even look at just so we can be like, yo, like this really does work on everything. Like, yeah, it does work on everything. but I want to find good examples for you guys. I don't want to just show you like just, shitty examples. Let's go. None of these are trending nice. Let's see, let's see, let's see. I like how the market structure is trending here. So let's just go ahead and look at this. Yeah, I like how structure is trending here. All right, so let's go ahead and break this down. This looks complicated, yet clean enough to break down for you guys. So is the market an uptrend here or in a downtrend here? What can you guys see? Again, we're on the daily time frame. So this is your trend, higher time frame. Is this going up or down, guys? Simple. Up, right? Market's going up. Okay, market's going up. Now, let's go ahead. Notice how market is dropping and giving us counter trend breaker structures to the downside. So at this point, this is my change of direction line. Market gives me another, well, it's not a breaker structure, but this would be more of a liquidity sweep. Now my change of direction is right here. Notice, guys, this isn't a change of direction. This isn't a change of direction. We want the market to break and close above. That looks pretty good. Now, when it comes to my shoulder, notice that's my shoulder zone. My stop loss is the low. But tell me, guys, I know a lot of people that are going to say this setup is dog shit because the stop loss is way too big. I know plenty of people that say they would never take this because this stop loss is too big. But even though this setup is the setup and it's giving us everything we need to see, right? Market is bullish. Market looks like it hit a starting point. So market is respecting structure. Everything that we look for as a levels trader, everything is playing out. But they will still say they would never take this because the stop loss is too big. But guys, does it hit take profit? Yes or no? All I need is a yes or no. Yes. So this is your higher time frame setup. Okay. I just want to show you guys higher time frame does work. If you are someone who is new, mainly you just really have to wait. That's the only downfall with higher time frame, but you have to wait. Now, this is the positive, right? The pro when it comes to higher time frames. Less setups. So you guys have to understand this whole setup here was cooking from liquidity sweep to change of direction. This whole zone was cooking. So yes, this whole setup alone took 66 days. So you had to wait 66 days. But did you hit take profit? Yeah. Was it worth it? In my opinion, yes. Yes. Why? Because you had to wait. The longer you have to wait, in my opinion, higher the probability. Now, you know how many setups are going back and forth inside of here? A ton of setups are getting tossed around inside of here on lower time frame, right? On the higher time frame, it's just one. One. Lower time frame, there's a ton, right? So again, higher time frame, the con, which is not a con really, but the con, quote unquote, you have to wait. But the pro, it's one setup, bro. Lower time frame, um, it's a lot faster, more setups, right? So this is the higher time frame. It works. I promise you, it works. Okay. Now let's go ahead. We'll mark up our change of direction. Now let's see if we can catch something on the micro scale. Right now, again, guys, just because I need you guys to understand this, just because we drop down to micro does not mean the market owes us anything. Okay? I need you guys to understand that. Just because we drop down to the lower time frame to try to catch our snipe, the market does not owe us anything. Us, we, the trader, we're just trying to do our absolute best to risk less pips for a greater risk to reward. I need you guys to understand that. Give me a 10 if you understand that. Just because we drop lower does not mean it owes you anything. Okay? So now let's go ahead and drop down and see if we can see something. Now this goes time frame by time frame, right? Just because I say micro does not mean you have to drop all the way down to the 1 minute. Okay? Find a time frame that makes sense for you. I dropped down from the daily to the 4. I found my bearish break of structure, and this is my bullish change of direction. So on this time frame, on the 4 hour, this is my micro setup. It's still big, but technically it is my micro setup. Tell me, is this stop loss smaller than this stop loss? Is that stop loss smaller than that stop loss? Yes, not very much, but yes. So notice it all goes down to whatever time frame you feel comfortable with. Okay, this is the 4 hour. Let's drop down to see if we can go even lower. 1 hour and 4 hour share the same structure. Let's go down to the 15. 15 minute, 1 hour, 4 hour share the same structure. Let's go down to the 5. Most likely, they're all going to share that same structure. Yeah. Let's drop down to the 1 just to see, but I think it's going to share the same structure. All right, so it's the same structure from the 1 minute to the 4 hour. So this right here was definitely a news candle. Didn't give any momentum for pullback. That was a straight news. Boom, candle open, candle shot. Okay, now this is the thing. This is where, because it's not giving us a clear pullback down here, it would be a lot better and we would feel a lot more confident if we had a pullback about right here. So once the market changed direction, once we get this, boom, this is entry. We send the market back up, right? But now we're playing a bit more aggressive because it doesn't have this. Because it doesn't have this pullback on this left-hand side. So if you're looking to play more aggressive, we would have to like really, really stick with our bias. And I mean like stick with it to the end. Like we're looking for buys no matter what. Now, this is the thing, right? Nothing changes, guys. Would you consider this liquidity, guys? Would you guys consider this liquidity? Yes, guys. Liquidity sweep. Change of direction. Whether you use that one or this one, the market changes direction. I mean, we should have just left it the way it was, actually. Now, I don't know if this gives you an entry, right? This just because we drop down does not mean it owes us anything, and it does. Wow, that's fire. That's stupid fire. So now this is the thing, right? When it comes to the setup, this is going to be the stop loss for this structure. However, right? Shoulder, neckline, head, change of direction. I like this change of direction a bit better. Change of direction, right? This is my head to the brand new stop loss, right? If you want a bit of a looser stop loss, your stop loss would be here. So now this is how we run the opportunity. Now, again, we're looking to continue buys. So let's jump up to the 1 hour time frame. Look at guys. This is the thing. This is what I love about trading, bro. This is what I love about trading, right? Notice, guys. Left shoulder, neckline, head, change of direction. When the market changes direction and makes that U-turn to come back for you guys, again, we want to target that. Why? Why do we want to target this? Because if the market really wants to continue the trend, let's clear this up for to clean to clarify. High, low, high. We want to continue with these highs. So yes, I would like to see if we can hold. So that's a 1 to 12 risk to reward. Even if you use this stop loss, guys, that's not a bad stop loss. I ain't even gonna lie. It does get better, right? At first, we had this. Actually, at first we had this. Big as hell. Does this make sense, guys? At first, we had this big old stop loss. Second, we minimized just a little bit to this. Third, we minimized to this. And again, this is letting the trade have a little bit of extra room, right? If you are looking for like someone who really likes to risk less pips, that's for you. For me, honestly, I would not mind risking a little bit extra just for comfort, right? But that's still fire, guys. Mark is doing its thing. Hold that ground. Hold that ground. TP hit. TP hit. So instead of rocking a super large 1 to 3, right? You could be rocking a 1 to 11 the right way. The right way, guys. Give me a 5 if this is making sense, and give me a question mark if you are like completely confused. Let's go. Let's go back to the daily, right? Let's go back to the daily. Notice how we broke everything down right here, right? This was my right shoulder based off of my change of direction. Now, this is the thing, guys. Even the daily setups, I love daily setups, bro. When I back test, I solely back test on the daily because I know at the end of the day, I don't know how long it'll take, but the market structure will always come back to the daily/weekly zones. Why? Why will the market structure always come back to daily and weekly zones, guys? Let me know who wants to be right and who wants to be wrong. Go ahead and guess. Why will the market always come back to daily and weekly zones? It's okay to be wrong, guys. Higher supply and demand. Pretty much. Simpler said, right? Higher supply and demand. So notice every time market is going back and forth every day, people are buying and selling every day. You guys, people are participating in liquidity. But you know what happens? Market will always drop down, come back to the daily, and continue up. So I noticed this, right? I notice everybody likes to participate every single day, trying to catch the move of the day inside consolidation. And you know where I wait? I wait right here where I'm supposed to. We have a bearish break of structure. We have a bullish change of direction. My left shoulder is here. My starting point is here. I don't even know what the market's going to look like, but let's see if the market consolidates. Right? Let's see. Because again, guys, this is my higher time frame setup. This is the daily, higher time frame bias. Market structure is still in an uptrend. I still want to look for buys. Okay, so let's just take a look. Look at this, guys. Everybody participating, trying to catch the move of the day. I'm not saying you can't catch things, right? Somebody obviously caught this. Somebody obviously caught this. Somebody obviously caught the sells. But for me, I want to continue with this trend. So let's see if the market hits take profit, right? I'm showing a higher time frame first because I want everybody to understand that the higher time frame does work. Takes a long time, but it does work. Boom. Take profit, hit. So guys, look, check me out. From entry to take profit, it took 110 days. Who wants to hold trades for 110 days? Who wants to be able to hold trades for 110 days, guys? I mean, unless you don't. Like, if you don't want to, I get it. Like, some people can't stomach it. Some people want to be in and out. I personally don't want to be in and out. I don't want to have to be tied to my computer to try to catch the move of the day. I don't want to put that much more pressure on myself to try to find what setup is the best setup out of many during the day. Higher time frame, rides with the trend. It's one setup. You have to wait, but you hold for a long period of time. I like that. Now, let's just see if we can drop down lower and see if we could find a lower time frame setup down there. So let's drop down again. I like to go time frame by time frame, guys, because if you don't have to drop down to the 5 minute, like you don't have to, right? You don't have to. This is the 4 hour time frame. And honestly, I'm liking this alone, just like this. I see a bearish break of structure, right? Bearish break of structure, followed by a change of direction right here, right? This is not the change of direction. That is not the change of direction. This is the breakout rally. We need to pay attention to the breakout rally, right? So this breakout rally gives me my bullish starting point right here, followed by my head and shoulder. My stop loss goes at this low. Yes, the market gives me a little bit of drawdown, but does the market hit stop loss, guys? Does the market hit your stop loss, guys? Yes or no? You tell me. No, you're good. Yes, you hold a little bit of drawdown, but you're fine. You're good. Focus on the structure and you will be okay. Right? So again, the risk to reward doesn't get that much better. The stop loss doesn't look that much better, right? I mean, it looks like we're only risking about 10 pips less almost, it looks like, right? This is 168. This is 150, right? So not that much better, but still a tad bit better. Now let's drop down and see if we could find anything a bit lower. Let's see if we could find anything a bit lower. So let's drop down. See if we can close this. And I want to see what this pullback is right here. Let's go to the 1 hour. The 1 hour is this one here. So we slightly adjust. Change of direction is here. Right? Change of direction. breakout rally. Technically, my starting point is here. So nothing too crazy, right? It's fairly the same. It still works, but fairly the same. Now let's go ahead and drop down to the 15. Same. Let's drop down to the 5. It's the same. Let's drop down to the 1. All right. So now same thing, right? I would like to see, this gives me more comfort, a pullback happen here, low, change of direction. That way we can have a head and shoulder here. So when the market comes back, we feel a lot more comfortable because structure is giving everything that we need to see. However, the structure and change of character line is here. So again, we are playing a lot more aggressive, um, with this opportunity. Okay. Now, this is the thing. Let's focus on the structure. Focus on the structure. BOS of the downside. BOS. I'm gonna clean this up for clarity. BOS to the downside. My change of direction on the 5-minute time frame is right here, right? It does grab my shoulder, but this is the thing, and this is what I think it came back to snipe. Guys, would you consider this a breakout? This isn't a rally, but would you consider this blue candle above this black line? Yes. So let's find the starting point, which is the last selling candle before the breakout. My stop loss. Let's go ahead. We know this is already touched. So we want to see, and look, I know Etni's like, yo, there's an imbalance right there. Right? Goes hand in hand. Goes hand in hand. Etni, did you eyeball that imbalance or not? Or am I tripping? I'm just trying to like feel like I know you. You feel me? But now let's take a look. Let's go back up to that 15-minute. Does the market structure come back for that before heading out? I don't know, but let's take a look. Let's clean this up just so it's not ugly. Let's see. Oh, was that it, bro? Oh, I hope not. Took off, bro. Well, let's see what it did hit. Right? Let's see what it did hit. My eyes are just seeing this starting point that's just held it down as of right now. So let me just drop down time frame and see if there's a starting point specifically anywhere. Oh yeah. Oh shoot, the starting point is actually right here. All right, guys. Our eyes are training. Notice this is the breakout, right? This is the breakout rally. Are you guys with me right now? This is my breakout rally right here. Guys, notice if you zoom in, this is my last selling candle. Let's drop down to the 15-minute. Sometimes dropping down too much, we can misanalyze. That's why I like dropping down time frame by time frame. So even on this time frame, notice we only have one break of structure. Break of structure here, change of direction here. Technically, my left shoulder is right there. Let's see if we come back for that. Yes, sir. Yes, sir. So I'm a fan, guys. I'm a fan of going to micro timeframes, going to lower timeframes for entries, but I am also a fan of jumping up a time frame or two to see if we can widen out our zones. Because again, structure will be different on every time frame, right? And when we go to lower time frames, we usually shrink up zones super tight, right? But we can also see if we can widen them up just a little bit, and that makes that much of a difference, right? We went down to the 5, we missed it by like that much. We went to the 15, we widened the zones by that much, and we sniped it by that. Like, I'm telling you guys, just like a game of inches in sports, trading is a game of pips. Pips, bro. Right? So I am a fan of dropping down to find my entries with structure, but I am also a fan of going a time frame up or two just to see if we can widen those zones out just a little bit, right? Just a little bit. Because again, just because we drop down to lower time frame does not mean the market owes you an entry. We're just doing our best to catch our opportunities with the least risk possible, right? You taught me to take my stop loss less tighter, and it definitely helps. I used to like, bro, tight stop loss. I'm risking 15 pips only every trade, and then I would just get stopped out. And I'm like, bro, it's obviously it's not working. So Etney, shout out to you for having enough humility to be like, you know what, tight stop losses aren't working for me. Let's be coachable and try out, to uh a little bit looser stop losses, right? So, guys, it's all about rolling with the punches. If you're trying something and it's not working, you don't need to have an ego. It's not working, right? Go ahead, let's fix it. Let's tune it up, sharpen it up, try something new to see if that could benefit you, right? Because what works for me might not work for you. What might not work for what works for Etney might not work for me. But we like to bounce ideas off of each other so we can see what works for each other, right? But I hope you guys had some clicking moments on this call today. I did my very absolute best to break down macro to micro with examples, and I did my very absolute best to break down higher time frames all the way down to lower time frames with entries. Because again, I do know where I'm at, you're probably not at, and that's okay, right? So I hope you guys had a great call. I will be uploading this call to YouTube in just a few minutes. But I hope you guys have a great trading week. Trade responsibly. Send in your charts for feedback, and let's clap the market together, guys. You guys have a great weekend, or you guys have a great week. I will see you guys on Friday. Let's go.